Herman, who's the Director and Chief Investment Officer at Citadel Asset Management. A very good afternoon to you, George, and thank you for joining us. Now, the JSE was already in the red in early morning trade in anticipation of the GDP data that was to come out in the late morning. That came out, and as expected, there was zero growth in the third quarter. And I'm just wondering what your thoughts were in terms of the indices that contributed the most to the contraction in growth in South Africa for the third quarter.
Indeed, your comprehensive summary of the numbers highlighted all the pain areas, no bigger so than the agricultural area industry. So spare a thought for our farmers. If you have less energy to use in your production process, you have avian flu, and then you can't export your produce, that makes things pretty difficult. In terms of the stock exchange, the movement wasn't a surprise or a shock. I think we're just seeing literally a situation of the chickens coming home to roost for our economy. These are the signs of the structural impediments that our economy has been suffering under for quite some time. The JSE did go somewhat negative post that number, but I don't think it was due to that number. In the context of where the global financial markets and specifically the emerging markets are today, our movement is entirely in line with the rest of the globe.
Let's speak about the fact that the period did see substantively lower levels of power cuts, George. And one would have thought with manufacturing data coming out, manufacturing saying we had more hours, that means we could produce more. There might have been a little bit more economic activity. Obviously, that hasn't been translated into this particular data. So what are those huge issues apart